What's up, trading nerds? Today we will have a look at a strategy based on one single indicator, the Ichimoku Cloud. There are different ways to trade the Ichimoku Cloud, and in this video I will explain some of them and compare the results. For that I coded a backtesting script for TradingView. Watch the video until the end to get access to that script. And don't forget to like and subscribe if you want to see more of this content. As I said in the beginning, we will use for this strategy only one indicator. That's because the Ichimoku Cloud claims to be an indicator that shows support and resistance levels, as well as momentum and trend directions. So that alone should us give an edge in the market and give us a winning strategy, right? Let's find that out after we understood the indicator. The Ichimoku Cloud can look very confusing at the beginning. So let us break it down into three components. These three components are the conversion and the baseline, the cloud and the lagging span. Let's start with the conversion and the baseline. Both lines are the averages of the highs and lows of a certain period, so they kind of have something in common with regular moving averages, but they're still a bit different. The default period for the conversion line is 9 and the default period for the baseline is 26. So the conversion line is reacting faster to price changes than the baseline. The calculations are as follows. Similar to moving average crossover strategies, a crossover of the conversion line over the baseline indicates a bullish momentum, and a cross of the conversion line below the baseline indicates a bearish momentum. The cloud is built by two lines, the leading span A and leading span B. The area between these lines is filled and called the cloud. If the leading span A is above the leading span B, the cloud is colored green. Otherwise, the cloud is red. These two lines, and so the cloud is shifted 26 candles in front of the current price bar. The leading spans are calculated as follows. So the leading span A is the average of the close price and the baseline, and the leading span B is the average of a 52 period high and low. The cloud is often used as a trend indicator. If the price is above the cloud, the market is considered to be in an uptrend. If the price is below the cloud, the market is considered to be in a downtrend. And if the price is inside the cloud, the market is in a range. For confirmation, the color of the cloud is considered. So the uptrend is confirmed if the color of the cloud is green, and the downtrend is confirmed if the cloud is colored red. The cloud can also be used as support and resistance that is projected into the future. The lagging span is just the close price plotted 26 periods into the past. Combined with other elements of the Ichimoku Cloud, it is used to spot trend changes. Since the lagging span is just the close price shifted into the past, you can consider the market is in an uptrend if the lagging span is above the price. If the lagging span is crossing under the price, the uptrend may come to an end. The opposite is true for a time when the lagging span is below the price. If it is then crossing above the price, the downtrend may have come to an end. Sometimes the lagging span is not compared to the price itself, but to the cloud. The signals of this interpretation are less often reversing. This is because the lagging span must then move through the entire cloud to signal a trend reversal. Since the chart can look confusing and some of the lines are shifted into the future and into the past, it can be very frustrating to manually backtest an Ichimoku Cloud strategy. This is only one advantage of automated backtesting over manual. I made a whole video about the comparison of manual versus automated backtesting. I will link it here in the info card. So I coded a strategy with all its variations in PineScript, the programming language for TradingView strategies. And what these variations are, we will consider now. So the foundation of the strategy is the cloud itself. For a long entry, the cloud has to be green and the price have to be above the cloud. And for a short entry, the cloud has to be red and the price has to be below the cloud. For the conversion and the baseline, we will test two versions. The first one is that the conversion line has just to be above the baseline for a long entry and below the baseline for a short entry. Later at the results I will call this type the above-below option. The second type is the crossover type. So for this option the conversion line has to cross the baseline right before we enter the trade. For a long trade this has to be a conversion line cross over the baseline, and for a short trade a cross under the baseline. For the lagging span we have also two options. For the first one, the lagging span has to be above the close price for a long entry and below the close price for a short entry. This type is later called the price option. And the second option is that the lagging span has to be above the whole cloud for a long entry and below the whole cloud for a short entry. And this option is later called the cloud option. As you can see, all these variations can be set in a script under the entry conditions section. For exiting the trade, we will wait until the next cross of the conversion and the baseline. So a cross under the baseline for a long entry and a cross above the baseline for a short entry. This should tell us that the current upside or downside momentum is decreasing. Additionally, I have implemented an optional stop loss that can be based either on the ATR or on the previous lowest low for longs and highest high for shorts. For the upcoming comparison, I will always use an ATR based stop loss with a 3x multiplier. For our position sizing, we will risk only 2% on every trade. This can of course only work if we have a stop loss selected, because otherwise we don't know at the time of the entry at which price we will close our position. We will now compare stocks, crypto and the forex market. For that I chose Apple for the stock market and BTC for the crypto market and Euro USD for the forex market. We will have a look at the 1 hour and the 4 hour time frame. At the Apple 1 hour backtest, the profit graph of the above below plus price option looks best with a steadily raising profit. At the 4 hour chart we have much less trades, but the graphs look very similar. At the BTC USD 1 hour backtest there was a nice gain at the first 2/3, but then a big drawdown at the last third. At the 4 hour chart, strategies at the top with the cross option had a longer drawdown period in the middle. That was not present in the above below option. At the Euro USD 1 hour backtest, all profit graphs look very choppy. And applied to the 4 hour chart at the Euro USD, the strategy was even losing money in the backtest. Here we can see all the profit factors of all the variations in one graphic. The highest profit factor was achieved by the Apple 4 hour chart with the cross plus price option. At the BTC USD 4 hour chart, all variations had a very similar profit factor. Just the cross plus cloud option got a slightly better result at the backtest with a 1.943 profit factor. The strategy was barely profitable at the Euro USD 1 hour backtest. But if we consider fees, the results would also be negative. So let's only consider Apple and BTC USD from now on. So if we focus on the options and compare the results of both the cross option against the above below option, we can see that always the cross option achieved better results. So let's have a look at the maximum drawdown of the two variations with the cross option and only the Apple and Bitcoin results. At all 4 charts, the cross plus cloud strategy had achieved a lower maximum drawdown compared to the cross plus price strategy. And finally, let's have a look at the Sharpe ratio. Here we can see that the strategy achieved a much better Sharpe ratio at the BTC USD than on Apple. And now I will give you access to the strategy script for TradingView. You can either click on the link in the video description below or search for Ichimoku Cloud Trading Nerd on the Indicators tab in TradingView. So if you want to backtest it for different markets or settings, or apply commission fees to it and see the results, you can do so. I would appreciate if you like the video and consider subscribing if you don't want to miss any of my upcoming videos. Thanks for watching and see you next time.